This is actual sales that have happened, not launches or inventory, just to be clear. It's very clear that Hyderabad has seen very strong correction, 27% year on year, whereas the rest of the other cities, if you see, are not too far off. Now, what this tells us is that the correction or the degrowth in sales is not just a Hyderabad phenomena, but also a pan India phenomena. So there's a macro factor here at play. That said, Hyderabad has seen much stronger decline compared to other markets because of more local dynamics as well. Now, why is this? Firstly, a lot of this is attributed to general correction post COVID. If you look at baseline trend of how many people were to make purchases per quarter, it's around 40 to 50,000, right? This is the baseline, and then there's a lot of volatility going into COVID. And then post COVID, we really saw that 40 to 50 jump to almost 100k for significant period of time, right? Very strong demand post COVID. People wanted bigger homes, people wanted residences so that they can be assured. A lot of movement happened across different parts of geographies as well. So that sudden shift also meant higher prices, higher price for raw material. As you would have seen, the steel, cement, all of that went up during this period because of this. Now, what we are experiencing in 2024, specifically in H2, is a very strong reversion to mean or correction. Right? So this is the reality of any business. Right? There is strong surge, and then there is a correction, and then hopefully things settle down. Post COVID and post COVID surge. I know it's a little weird to talk about COVID impact even 5 years after the initial wave, but that is the impact that it has had on several businesses. Right? Just volatility, very strong surge, and then a bit of that correction and mean, and reversing to mean. But there are other factors too. There's change in policies, macro factors, inflation, interest rates, new jobs being created both at a pan India level, at a Hyderabad level. All of them will have an impact on real estate. Even something as simple as, what is the H1B policy? With that, I'll go into a bit more of what's happening specifically in Hyderabad. But this is the inventory that is available. So this is again, we're pivoting from sales volume to what is available in the market. We're seeing roughly 35% of all inventory that is currently available is in that 1.5 crore plus, quite in line with other markets. We're not really deviating from that. But what I've seen is new launches, a very strong skew towards ultra luxury. There's over 50% new launches that are in that ultra segment, ultra luxury segment. Right? But largely 35% sitting in that 1.5 CR is quite in line with what we see across different metros. Now, coming to another issue that Hyderabad is specifically facing is inventory overhang. What does inventory overhang mean? In simple terms, it is how many months will it take for all of the existing sales or existing inventory to be dried out. Right? Let's say as simple as one project has 100 units. How much time will it take for it to be sold out is what inventory overhang is, assuming historical data holds true. Right? Every month they've been doing 10 units, so it'll take 10 months for all of those 100 units to be sold out, right? Now, what we are seeing at an aggregate for Hyderabad is that very strong inventory overhang, which means that supply is outpacing demand and it's taking much longer for us to clear out the existing inventory. For builders to gain more visibility and for consumers to also say that yes, there won't be any delays, this is one thing to keep in note. With that, it's a good pivot to what's happening in Hyderabad specifically in terms of new launches, especially in that ultra luxury segment of 2.5 CR plus. Now, I won't go deep into this. If you want to, if you have any specific requirement, feel free to drop a comment. I'm happy to have a deeper conversation on this. But by and large, there are at least 4,000 new units or 4,000 new inventory that is getting created. And mind you, this will be absorbed over a good 5 to 6 year horizon. So it's average run rate of 800 units that this is adding per year. We have Encanto here, which is recently launched, all in that 3,000 plus. I think Encanto is 4,000 to 5,000 square feet, so anywhere between 4.5 to 5 CR in terms of ticket size. You have a couple of projects by Myscape along this road. Myscape Palma, which is about to launch, not yet there in the market, but will be launched soon. Myscape 212, which is again an ultra luxury project, at least with a ticket size of 11 to 12 CR, I think close to 12 CR plus, with 10,000 one unit per floor. So this is a different league. And then you have Jayberry the Pinnacle. Let me be clear, this has been a project that existed for a while, but they've recently made a big push into the market with an experience center that is really strong. Good low density project, Jayberry, 4 units per floor. Absolutely something to consider if you're in that ticket size of 3.5 CR plus. Right, so that's everything in Financial District / Kajaguda. Coming closer to Neopolis, you have Fortune Grande. I wouldn't necessarily call this Neopolis. I think a lot of them are marketing it as Neopolis, but to be honest, until this road gets built out, I wouldn't call this Neopolis. But yeah, this is the only project that potentially has a 2850. Ironically, that's the kind of sizes that we're dealing with in this location. So good 3 CR plus ticket size, 3 and 4 BHKs. Massive inventory, 1200 plus in about 10 acres, if I'm not wrong, 9.5 to 10 acres. A good project to consider for the longer term, but do be mindful of the road access, especially in the shorter term. Now, a bunch of projects have been launched in the Neopolis segment itself. There's Rise with 9. The same guys who are doing Twilight are also coming up with another project. Looks good on paper. The USP of this project is they have double heighted living. Usually you've seen double heighted balconies, but this has double heighted living within the room. And then there's the phase 2 or the second tower of Brigade Gateway that's getting launched. They've done well with phase 1, an integrated community with, a hotel, intercontinental, and also commercial activity. Someone who doesn't mind that will be a great option. I've heard Tower 2 is getting launched at 14 to 15K, so quite pricey. Then you have 3 other options. Again, not all of them are out in the market yet. This one is Skyra, a high dense community with 56 floors, 777 units in about 6.5 acres. Also in that 3,000 to 5,000 square feet range. So easily around 4 CR, 3.7 to 4 CR ticket range. Then MSN plot 6. So MSN Pharma has bought 2 plots. Plot 1 that is already out in the market, which is 1 in the 5,000 to 5,000 plus square feet range. This will be relatively smaller, so around 3,000 square feet plus. Will be launched in the next 6 months based on what I know. And this I can't name, but if you're interested, there'll be another project by a strong builder, also in that Neopolis belt. But again, no views of lake can be expected here, in my opinion. But also in that 2,000 to 3,000 square feet range. All right. Zooming out, I hope that gives you a good sense of what's coming down the pike, what's available already in the market. If you are in, looking for a home in 3.5 CR plus, big expansive floor plates, 4 units per floor or 2 units per floor or 1, I think there are plenty of options out there. I know it gets overwhelming for you to choose among all of these options. We're just talking about new launches now. There's a lot of existing inventory as well. Feel free to comment and we can potentially alleviate some of those concerns. With that, we'll call it a wrap. See you in the next video. Thanks for watching.